Welcome to Market Movers, where we identify market moving headlines and then discuss ways to either hedge risk or create exposure in affected assets. We have Scott Martin.
Hi, Jim.
Hey, Scott. It's unemployment week. We saw the ADP number, which was, obviously terrible, but oddly not as bad as it was expected. Does the NFP number on Friday matter much? I know it doesn't matter as much as it usually does. Does it matter much?
It matters a lot to me, actually, because I think one of the worries out there, Jim, is that we get an outlier NFP number. And sometimes we've seen that vis-a-vis the ADP number you referenced. So I believe that as long as the NFP number is somewhat along the lines of the ADP number, it probably doesn't matter as much. But we've had these data, distractions before where the numbers are not matching. So anything that's, again, outside of what is expected either helps or hurts the market.
And what will it affect? Equities? It'll affect risk assets the most, right? That's where we expect the most punch there.
Definitely, but in this market, Jim, it's funny. This has been kind of a rolling volatility scenario. So while equities will certainly feel the brunt of that, don't be surprised to see some movement in GC Gold or ZN 10-year as well.
Speaking of those two, okay, the Treasury announced massive issuance of new debt, which has started rates in the 10-year. Seems to be a little bit higher now. Do you think this is going to continue? It seemed like that 0.6 level seemed like a floor in rates, and now they've headed a little higher. They headed towards one.
I believe they are, and it makes some sense. And it's funny because it's not necessarily a statement on economic growth, but to your point, more a statement on supply. As more debt is issued, more bonds hit the market, and as you get more supply of anything, we see prices fall and yields go up. So in my opinion, we are not near the end of, say, these bond issuances. So as more bonds come out on the market, the yields will tend to rise.
Right. I think yields will tend to rise too. And I actually have, for myself, some positions on in the 10-year contract, which the 10-year futures contract and option contract, one of the most liquid futures contract in the world. There is weekly, quarterly, monthly options that all have outstanding liquidity in them in the ZN. The gold as well too. Gold has the GC, they have the micro gold, and the gold contract itself has monthly and weekly options. So now the NASDAQ's been pulling the wagon, clearly. As a matter of fact, it's been about 5 names that have been pulling the wagon in the stock market disproportionately to normal times. Are you expecting that to continue?
I am, Jim. Those are the strongest names in the marketplace, in my opinion, and as well as in the ES too. So not only in the NQs. And you put it that very exquisitely. The NASDAQ has been pulling the wagon both up and downhill, which is something to keep in mind as a trader and investor, is that as we've talked about on previous Market Movers segments, I believe a lot of the oomph is still in the NASDAQ here. And so when I look at maybe some equity exposure here, I've been focusing a lot of my attention on the NQ contracts.
See, it's interesting to me because it seems like when the market starts to move higher, it's those that are pulling the wagon. So the NQ contract of the CME is the one that does the heavy lifting. But on downward moves, it seems like the broader market, because it's more of a domestic story that comes out about the virus. So the Russell comes out. So it's interesting that you have 4 different ways of exposure just in equity market itself. You have the S&P, which is probably the broadest, most general, NASDAQ, Russell, and the Dow. We have both the mini contract and the micros and liquid options markets, all those.
Correct. And I think that's an interesting way to also position yourself too across maybe some of those 4, depending on, like you said, how you feel about the market and where it's going.
Okay, and also now with the coronavirus story, news can break at all times, not just in regular trading day, overnight. Have you been plugged in the overnight session, and has that been of value?
It has, Jim. I'm plugged in an overnight session because I love the liquidity and exposure that futures can give you in, say, the non-traditional session, as you mentioned. But one thing to note, as just an investor and trader, a lot of the overnight volatility has been sucked out of the markets currently. And while I believe that's going to return, and when it does, and certainly as we've seen it maybe so much more a little bit in the last few days as we've come up to this big non-farm payrolls number on Friday, I believe using futures is the right way to expose yourself when it comes to some of those sessions that happen overnight.
Agreed. There were some crazy Sunday nights over the last few weeks, but it seemed to have settled a little bit. Thank you for joining us on Market Movers, where we are helping to make you a better trader.